A very good evening to you all, friends. I am Sanjeev Singhal, Central Council member and Chairman, Auditing and Assurance Standard Board. I welcome you all to the 72nd program of AASB for this council year. So, in less than 72 days, this is our 72nd program. And so far, we have approved 82 programs on bank audits. So, I'm sure that you are being benefited from these programs on physical mode as well as the virtual mode. We also thought that apart from the physical programs, let us also do virtual programs where members from across locations can attend these programs. And with this objective, we have come up with a series of 3 webinars. Today is the first one, then 2 more are there, wherein on the virtual mode, various facets of the bank audits will be discussed. And friends, we are also coming up with an expert panel on bank audit. This will be the 4th year that an expert panel will be there on bank audit related queries. Earlier, this panel used to be for 15 days. Some of our members suggested to increase it up to 30th of April. So we have increased it up to 30th of April this year. So this panel will run from April 1 to April 30th. You can ask your questions. Members suggested that we add a FEMA expert also. We have added a FEMA expert also. And members suggested that we classify the query according to the topics, say advances, LAFAR, documentation, etc. We have done that also. If there are any further suggestions, we can incorporate that as well. We have 50 experts who will, who will endeavor to respond to your queries within 24 hours to 48 hours. Immense benefits have been reaped by our members in the last 3 years also. Kindly take maximum benefit of this expert panel. And there is no fee for asking or for answering any of the questions. So it's been our endeavor in AASB to give maximum possible guidance to our members. Please also refer to the guidance note on audit of banks 2024 edition. It's a wonderful piece of document. Also use the Excel utility for bank audit, which the Center for Audit Quality has issued. This has been revamped this year. Many more features have been added. So I encourage you to use the support provided by your own alma mater, Institute of Chartered Accountant of India, and do a quality bank audit. It's a very, very important function that our members play. And I'm extremely thankful to C. Raghavendra Goyalji for accepting our request for being a faculty for the day. And thankful to Manish Bansalji, who's a co-opted member, who has been a co-opted member in the Direct Tax Committee of the Institute last year, and to Dinesh Gandhiji from Karnal, who has been a special invitee in the Government and Public Financial Management Committee. Both are very esteemed members, and I'm thankful to them for accepting to be the moderator of this program. So with this, I wish all of you a happy learning and hand it back to our moderator for taking it forward. Thank you.
Thank you, Sanjeev. Thank you. First of all, I would like to thank ASB working under your chairmanship, who have started this 3 webinar series. And sir, no time could have been better than at the period when the bank audit and the members need refresher kind of activities, which I hope these 3 webinar series will fulfill the objective as well as the knowledge learning, which covers from the academics to the training part. Well, for the duty of the day, I welcome all the esteemed members who have joined this webinar, and I especially welcome C.A. Raghavendran Goyalji, who has been faculty to this member. Dear friends, in an attempt to refresh regarding all the integrities of the bank audit, these 3 webinar series has been planned by AASB, and I am hopeful that all the learned members who have joined this webinar will be benefiting from this program. I invite my co-moderator Dinesh Gandhiji to introduce C.A. Raghavendran Goyalji to the members at the large.
Thank you, Manishji.
Thank
you, Manishji. I thank AASB for organizing this webinar on bank audit. I also thank C.A. Sanjeev Singhal Central Council member, for his presence here. I also thank C.A. Manish Bansal, my fellow moderator from Mandi Dabwali. I also thank all the participants of this webinar. Now I introduce today's speaker on this seminar. C.A. Raghavendra Goyal is a fellow member of the Institute of Chartered Accountants of India. His area of specialization includes statutory bank branch audits, risk-based internal audit, due diligence assignments, forensic audits, study of effectiveness of internal financial control over financial reporting. With the advent of international financial reporting standards and the subsequent Ind AS framework being adopted by Ministry of Corporate Affairs, his area also includes consultancy on accounting standards and Ind AS. Being an alumni of Shriram College of Commerce and Ernst & Young, coupled with the youthful energy and enthusiasm, he has been very active in the professional circle and has been delivering in various seminars and conferences since articleship days, being organized by the Institute of Chartered Accountants of India on various topics, including lecture series on Ind AS, statutory bank branch audits, coverage in LFAR, internal financial control, relevant to banking and other companies, Caro, etc. CA Raghavinder Goel is a certified information system auditor, and he also completed his certificate course on concurrent audit, forensic audit, and fraud prevention valuation in AS, all organized by ICAI. Besides, he has successfully completed the course on mergers and acquisition at IIM Ahmedabad, which had participation of directors, owners of various listed renowned entities, along with the plethora of other professionals. He completed the training program being organized by Ernst & Young on the topic International Financial Reporting Standards. He has also completed the training on peer review organized by the Institute of Chartered Accountants of India. CA Raghavinder Goel was a special invitee in Expert Advisory Committee of the Institute of Chartered Accountants of India. The committee is responsible for giving opinions to various corporates, including listed entities, on issues of accounting and auditing. CA Raghavinder Goel has pursued his PhD on the topic Benefits of Implementing Ind AS on the Indian corporates. Now I request CA Raghavinder Goel ji to please take the session.
Thank you so much, Dinesh ji and Manish ji, for moderating today's session. At the outset, I would like to thank CA Sanjeev Singhal ji, Chairman AASB. Sir, in his opening remark, had rightly said that even within 72 days, AASB has organized many programs, mostly on bank branch audit, which shows the dedication of the institute towards imparting right knowledge and right information to the members at large, so that the role which the Reserve Bank of India has given to us can be completed very effectively and very judicially. We often talk of our rights, but at the same time, we forget about our responsibilities. So now, friends, it is the time to own up the responsibility as well. We talk about that bank branch audit is reducing each year, but somewhere down the line, we'll have to introspect and give those quality inputs to all the stakeholders, including Reserve Bank of India, so that they are forced to get the major banks branches audited from us. Moving on and moving to the topic that we have today in hand with us. The topic that has been given to me is regarding the verification of loans and advances in a bank branch audit. So whenever we go to a bank branch audit, the first and foremost thing, or I would say the most important area wherein we put our attention, is towards the verification of the advances. Now, how should we verify the advances, or what should be the documents that we should be analyzing while we analyze the advances? To move in that direction, it is important to know or to bifurcate the advances into different categories. So broadly, we can bifurcate the advances into working capital loans or the short-term loans. And we can also bifurcate the advances into term loans, or what we call generally as a long-term loan. Then there is a different product called as agriculture advances. Now, if I limit myself to working capital loan, then there are various products which come under working capital loan. One is cash credit account. Second is overdraft facility. Third is gold loans. So these are probably the three broad categories which we have to keep in mind for verification of the loans and advances portfolio of a bank. Now, what is a cash credit account? And probably cash credit account would be the one wherein we would have the most amount of activity to be conducted. Cash credit account is an account which has been given to the bank for funding the working capital shortage of a borrower. So a borrower goes to a bank and says, sir, that I take the loan, I take the goods on credit, and I take the goods on cash, and I sell the goods on credit. Or the borrower can say to the bank that, sir, I have to stock the goods for 2-3 months before the sale actually happens and I realize the money. So there is a time lag between the realization and the time lag when the goods were actually paid for. So उस टाइम लैग को पूरा करने के लिए बैंक जो है वो वर्किंग कैपिटल फैसिलिटी जो है वो देते हैं. देयर आर 2 पॉइंट्स जिससे कि हम वर्किंग कैपिटल फैसिलिटी को डिटरमिन करते हैं कि वर्किंग कैपिटल कितना होना चाहिए. One which is given by the Nayak committee, which is based on the turnover of the client. So as to say that the bank says that suppose your turnover is 100, we would give you 20 or 25 as your working capital funding. And second method is the asset method, wherein based on the DP, the drawing power of the account, we determine the eligibility of the working capital of the particular client. Now, if you see your revised LFAR, the credit part has been divided into broadly 4 or 5 categories. First and foremost in that is credit appraisal. Second is documentation. Third is disbursement. Fourth is review and monitoring. So when we talk about verification, probably we have to do activities in all the 4 limbs of the LFAR, because we have to report in all the 4 limbs of the LFAR. Suppose now I pick up the first part, which is the credit appraisal part. Now in credit appraisal, what we need to exactly see as an auditor? Credit appraisal may, first we need to see whether the limit is properly sanctioned by the branch as per the various committee recommendation. So suppose the bank's guideline is that they have to give turnover based on the sale. So we have to see whether the projected turnover and the limit actually granted, the percentage that is in limit or not. So agar suppose some borrower has declared a projected sales of rupees 100 and the bank's guideline is to give 20% as the limit to that particular borrower. So the maximum limit that can be given to that borrower is rupees 20 only. So since the limit is only rupees 20, we have to see whether the limit is given more than that or less than that. If it is less than that, it is okay. But if it is more than that, then we have to report that particular transaction into our long form audit. Second part that comes is in this series is we have to see the delegation of power. So every organization has a well-defined delegation of power, through which it is decided that officer up to which level can grant amount of loan up to which amount. So suppose there is a branch which is chief manager headed, its power is rupees 5 crore. Then depending upon the DOP, he can only sanction of loan of about 5 crore rupees only. So we definitely need to check whether that officer, suppose it is a chief manager headed branch, the loan given is 5 crore or less than that or more than that. Less than that, as I said, is okay. But if it is more than that, then you have to report that into your LFAR, long form audit. Now, sir, practically speaking, I have found certain instances where banks have not taken a proper recourse to the delegation of power. We went to an audit of a branch. What we found was that the branch had given multiple customer ID to a same customer. And then against every customer ID, they had sanctioned a loan of 5 crore rupees. Now, when we asked the branch manager about it, he said, sir, my power is 5 crore. So in any loan, you would not find that I have exceeded my delegated power of rupees 5 crore. But when we saw the customer IDs belong to a same PAN only. So since the customer IDs are belonging to a same PAN, that means that those loans are of a single individual. Since single individual is involved, therefore the loan which the branch could have given to that particular individual could only be rupees 5 crore. Now, since we found that irregularity, we immediately reported it. So this is our responsibility. Once we go to the branch, we need to see the delegation of power and we need to report it. Sometimes what happens is you would also find instances wherein the branch, though has exceeded its DOP, but they are allowed to get their action ratified. Because in the normal course of branch, it is not every time possible that they first seek an permission and then they do an activity. A business comes to me on a very urgent basis in the morning and tells me that I want this facility today immediately. He is my customer since last 25 years. Now my process of sending the request to the zonal office or the regional office or the higher authority, whatever the case may be, is a time consuming process and it would take some amount of time. So normally what branch does, suppose they are confident about the net worth of that customer, they know that this customer is dealing with the bank since ages. So they allow that customer to operate that loan account and then post facto a ratification is taken. So in all the cases wherein the branch has exceeded its delegation of power, so it is our duty to check whether that ratification is obtained from the concerned authorities or not. Normally, it is also seen that the branches write for ratification but do not follow it for approval. So our duty as an auditor is that suppose if the branch has returned for ratification, but the ratification has not been sanctioned by the respective authorities, we should also mention that fact into our long form audit report. Because until and unless the ratification is received from the respective authorities, we cannot assume that the ratification has been granted by them. आगे बढ़ते हुए कैश क्रेडिट अकाउंट का जो दूसरा मेथड होता है सैंक्शन का, वो होता है करंट असेट बेस्ड या कि असेट बेस्ड. अब असेट बेस्ड में कैसे सैंक्शन होता है? सो ड्रॉइंग पावर कैसे निकालते हैं उसके लिए ये समझ लेते हैं. सो ड्रॉइंग पावर इज कैलकुलेटेड एज अंडर स्टॉक, then out of stock we reduce the the creditors, which gives us a figure of paid stock. Out of the paid stock we reduce the margin, which gives us the DP against stock. Then we consider debtors up to a specified period. Then we reduce the margin from the debtors. We get debtors DP against debtors. DP plus stock plus DP plus debtors gives me a total DP, which is also helpful for the banks to determine the total loan eligible to the particular borrower. अब क्रेडिट अप्रेजल के पार्ट में सर मैं थोड़ा सा आपको याद दिलाना चाहूंगा कि हम लोगों को पता है, जब हम अभी एनपीए के नॉर्म्स भी पढ़ेंगे कल, प्रोबेबली वो सेशन है, बट जस्ट टू रिलेट माय एग्जांपल आई वुड जस्ट टेल एवरीवन, as per IRAC norms, a CC account is treated as an NPA if the outstanding of the account is continuously in excess of the sanctioned limit or the drawing power, whichever is lower, for a continuous period of 90 days. So if my outstanding balance is in outstanding of the sanction limit or drawing power for a continuous period of 90 days, then I have to classify my account as an NPA. Ab what Manish ji did, sir, when he went for branch audit, he calculated the DP of the borrower with the formula that I had just told you, stock less creditors, he derived paid stock. And when he derived the DP based on this formula, the DP was short of the outstanding balance, and that was short continuously for a period of 90 days. So he said that, sir, I would classify this account as an NPA account since as per IRAC norms, your outstanding balance is continuously in excess of the sanctioned loan. As soon as Manish ji tried to classify this account as an NPA account, branch manager came up immediately with a circular stating that, sir, in my bank, the DP is no longer required to be reduced. I think most of us would have faced this situation when we were classifying the accounts as an NPA based on DP. So we would definitely get a circular wherein they would tell us that in our bank, creditors is not required to be reduced from the stock. Mostly you will find this circular in State Bank of India. So what State Bank does is when they calculate DP on this basis, at the time of appraisal, at the time when they take the CMA data from the borrower, they reduce the amount of creditors and then they calculate the limit. So if suppose such a situation comes to you and banks put up such a circular to you, then you can agree to that circular provided while sanctioning the limit. In the CMA data, they have reduced that creditors. And if the creditors is not going what they have assessed at the time of sanction of loan, then there is no need to reduce the creditors again. So therefore, at the credit appraisal part, it also becomes important for us to see the CMA data. और वो CMA डेटा देख के वी हैव टू सी कि क्रेडिटर का लेवल उन्होंने क्या असेस किया और आज की डेट में क्रेडिटर का लेवल क्या है, और अगर दोनों में आज की डेट का क्रेडिटर का लेवल उस दिन से ज्यादा नहीं है तो हमें दोबारा से जो है वो क्रेडिटर को माइनस करने की जरूरत नहीं. Now when I see the CMA data, and this is also a fact that cash credit limits are not sanctioned on the financials of the period which has gone by. Cash credit limits are sanctioned based on the financial of the coming years, जिसको हम projected financial भी बोलते हैं. So all of us, because cash credit चाहिए होती है next year के लिए, so you would agree that we sanctioned the loan based on the projected financial. अब ये भी केस सर बड़ा इंटरेस्टिंग केस है, थोड़ा ध्यान से सुनिएगा. आई एम लिंकिंग द केसेस विद द केस दैट वी गेट इन द नॉर्मल कोर्स ऑफ बिजनेस. हम लोग ऑडिट करने जाते हैं तो हमें ये मिलता है कि वो अकाउंट में प्रोजेक्टेड सेल्स तो उसने 100 रुपीज की दिखा रही होती है, बट जब एक्चुअली हम लोग देखते हैं तो उसकी सेल्स जो है वो हमें मिलती नहीं है. उसकी सेल्स 10, 20, 25, 30 रुपए पे जो है वो आके जो है वो सीमित हो जाती है. So when the borrower has declared a sales of rupees 100, but in actually that sales is rupees 30 or 35. Now every year you are seeing this trend. That every year the borrower says, sir, my projected sales is 100, but in actual he is achieving only 30 or 35 rupees. So if this is a case, then we need to put this question before the bank management and ask them that on what basis are you accepting the sales of the company? In the last years, when you have accepted the sales of the company is not able to achieve even 50% of what it has projected. And if you don't get any satisfactory answer to your query, then you should report this point in the LFAR stating that the sales which the bank has taken as correct does not seem to be achievable on part of borrower because in the last 5 years, its achievement vis-a-vis the declared figure is as well. We also encounter situations wherein based on projected figures, banks go for an assessment, an enhancement of the loan. So today the sale projected of the borrower is 100 or the actual sales of the borrower is 100 as per the provisional balance sheet of 23-24. Suddenly for 24-25, the borrower says to bank that my projected sales is 200. So he is in turn advising the bank that my sale will go up by 100%. So now as an auditor, it becomes imperative for us to verify whether this 100% increase which the borrower is claiming is justified or not. So we should put this question before the bank management that on what basis have you accepted an 100% jump of the sales over the previous year. So in case the bank has confirmed orders which it has received from the customer or the borrower, then only we should accept it. In case that kind of support is not available, or in case that kind of documentary evidence is not available in the branch, again, this point would come under your credit appraisal heading of LFAR. Now, if I talk of overdraft, overdraft can be against FDR, overdraft can be against property, overdraft can be against any immovable security or any movable security. Now, similar part goes in the overdraft part as well. जभी जैसे हमने just talked about the cash credit account. So similar part we need to see in the verification of the overdraft loans also, that we need to see whether that limit or the DOP of the bank is being complied with at the time this overdraft limit is followed. If I talk of overdraft against property, normally a bank sanctions around 75% to 80% of the property value to the overdraft account. So we need to see whether that 75% or 80% amount is only sanctioned against the overdraft. If it is more, then we need to report it. Similar is the situation with the gold loan. Gold loan also, again, we have to see whether that based on the valuation which the approved valuer has given in the gold, we need to check whether that valuation is duly met or not, and whether only appropriate amount of advance is granted to the borrower or not. Sir, I would request each one of you to kindly pay some attention on this gold loan part. This year, this gold loan part is very, very important. You would have followed the newspapers in the recent past, and in those recent part, you would have noticed that there was a gold loan fraud in a leading public sector bank which had just happened. And when that fraud happened, Reserve Bank of India, in consultation with Department of Financial Services, which is basically a regulator of the banking industry in our country from the side of ministry, came up with very strict deadlines and guidelines for verification of the gold loan portfolio of the borrowers. So what exactly happened, or what exactly transpired in this particular bank, that the RBI during its inspection found out that bank was giving loans which was closed or squared in the same day or within 30 days, or which was closed or squared from the internal office accounts of the bank. In short, RBI concluded that neither did the borrower came to the bank for taking the gold loan, nor was any repayment done by the borrower. All these accounts which were opened by the bank were all fictitious accounts which was opened just to meet their respective targets. Neither the borrower came to the bank, nor any request he gave for opening of the gold loan, nor any gold came to the bank, and still the gold loans were disbursed. The gold loans repayment came through the office account or through other accounts, and the gold loans were closed ultimately. But this brought RBI to a point where they said that whether this is only a bank related issue or this issue percolates to the entire industry. So through DFS, they issued guidelines to every bank to verify their respective gold loan portfolios. And now, as our auditors, since this is an activity which would have a direct implication on us also, we should also verify closely the gold loan portfolio of the bank. And when we go to any branch, I think in today's date, gold loan portfolio is a very important part of any bank's branch advance. Suppose if I talk of agriculture advance driven bank, then the gold loan is a major chunk. It constitutes a major chunk. So the gold loan, how the things happen is, so the gold would be coming, the bank would be appointing a valuer, the valuer would be giving a certificate as to the weight also and as to the valuation also. So as an auditor, you should first physically count the packets of gold which are there in the bank, which are hypothecated to the bank. This you also need to do, as because in the LFAR you need to comment whether the physical verification of the securities is properly conducted by the bank or not. Then you should also see the valuation certificates of the gold loan packets which are there. You should also check with the weight. I think if you would insist on getting the gold loans packet open, you would find some resistance from the banks, because the bank guideline says that the gold loan packets can only be opened by giving a prior notice to the borrower, and the valuer also has to be called for. So, but as an auditor, it is our duty to verify whether the number of gold loan packets which is available in our records and which are physically available, whether they match or not, whether their weight is in line with the weights declared on those pouches or packets. So that as an auditor, we need to definitely look at. And it is a very important activity. I would request each one of us to kindly look this activity into greater detail. So this is not in my topic, but since we are discussing about gold loans, I would like to touch upon this area as well. Normally, when you go to the branch audit, you would find that gold loans are demand loan in nature. And normally the interest applicable on this gold loans is either half yearly or yearly. If the interest is yearly, what the bank is doing is that they are not in these all these gold loan accounts, no amount of repayment is coming from the borrowers. At the end of year, when the interest is debited in the accounts, branch does the fresh revaluation of the gold it holds. And since in the last 2 3 4 years, what practice is happening is that gold price this year vis-a-vis the last year normally increases. So suppose my policy is to give 90% of the amount as a gold loan amount, and last year I gave a loan of 90 against a gold of 100. This year the value of that gold would jump to 110 and my loan amount would jump to 99. So I would give an extra limit of 9 rupees, and that 9 rupees would be sufficient to service the interest of the entire last year. Now, this way is without even a single penny being received in the account of the borrower, the bank says that the interest is served. So, whether as an auditor, should we treat this as a serviced loan, or since the interest payment has not come and tomorrow we'll learn that if the interest and or installment of the principal remains overdue for 90 days, then whether I should consider this account as an NPA account. So should I consider this as a PA account, or whether I should consider this account as an NPA account? It is also important to note here that these accounts would come under the definition of rollover of advances, which we need to report in the LFAR, the long form audit report. So in my humble opinion, I would suggest that if you find any such cases, you should report all such accounts as non-performing, because in the actual sense, the bank is only doing a rollover of all these accounts and there is no amount which is received from them. And necessary MOC should be passed for all the accounts. Now, in the credit appraisal part, and we would cover the credit appraisal of term loan accounts also. So, any loan which you grant for a period of more than 1 year would be a term loan account. Car loan is an example of term loan account. Loan for purchase of plant and machinery is an example of term loan account. Housing loan is an example of term loan account. All these accounts are an example of term loan account. So now in the credit appraisal of the loan account, irrespective whether the loan is a cash credit account or an overdraft or a term loan account, you would also notice that the bank has to obtain a CIBIL report. And through the CIBIL report, what they see normally is the credit worthiness of the borrower and the credit worthiness of the directors they see through this CIBIL report. Last few years, our banking industries were marred by a lot of frauds. And Reserve Bank of India, the regulator of the bank, realized that these frauds have happened in the bank. So there is a need to protect the assets of the bank from these fraudsters. So in order to protect the assets of the borrower, of the investor, RBI came up with a central fraud registry wherein, based on the historical data, they punched in the figure of the defaulters from the banking industry. And then they directed all the banks constituted under them that before they sanction any loan to any of the borrower, this CFR report must be looked into, and it must be ascertained that the borrower to whom you are giving the loan should not appear in this central fraud monitoring list. And as a branch auditor, some of the banks would seek a certificate from you on this very topic. So go through the closing instructions once you receive the appointment letter from your respective bank. In that closing circular, along with the list of certificate that we need to sign as a branch auditor, there would be a certificate on the fulfillment of the condition of this particular regulation. So we need to see that if the bank has given this CFR list or not. Now, the second question that can come to your mind is, sir, whether this CFR report is a public document. How do we verify that the name of the borrower is given in the CFR report or not? Now, see, this CFR report is not a public document. Lot of litigation went into till Supreme Court of India when the PIL was also filed there. And it was told by the Honorable Court that due to unforeseen circumstances or due to national security or national integrity and sovereignty, we cannot release this list and make this list as a public list. The Reserve Bank told in the Supreme Court on this matter when this matter was listed. So as an auditor, we can check this requirement through the appraisal form or the sanction form. So a sanction document is normally a limited document. So through the appraisal form, we can check whether the name of the borrower is appearing in the CFR list or not. So in the appraisal loan document, you would find the bank would write that so and so officer bearing such PF number has verified the name of the borrower on this particular date and found that the name of the borrower is not appearing in the CFR list. So they verify this and then they mention this in their loan appraisal document. Now, when the income statement of the borrower is given to the bank, they verify for its correctness. And to support them, they have many agencies which are more or less like you and me, the CA firms, who do a due diligence verification of the documents produced by the borrowers. So such due diligence reports must also be seen by the bank before accepting the income of the particular borrower. Plus, an independent verification must also be done of the income source from maybe the computation or from maybe the bank statement, which should be readily available with the bank. So those all documents should be available with the bank, so as for the auditor to see whether the bank has considered the proper the proper income criteria of that particular borrower or not. So this was mostly about the credit appraisal part. Now moving on to the documentation part. So once you decide on sanctioning of the loan, then there is a documentation which needs to be done, and documentation is done keeping in view the respective state. There is a stamp paper which differs from state to state, and based on that, mortgage is created, registered mortgage, equitable mortgage is created, and the documentation of that particular loan is done. For example, in the housing loan, if the loan is under construction, a tripartite agreement is considered and signed. For a house which is constructed and the registry is done, the equitable mortgage or registered mortgage is done. For a car loan, the name of the bank is mentioned on the registration certificate. So through this, the documentation formalities of different loans are taken care by the respective bank. Moving on is the part relating to disbursement. And I think as the statutory branch auditors of a particular bank, this is one area where we should place the most reliance upon the disbursement. Now, before you see the disbursement and before you can actually comment whether the disbursement has been done properly by the bank or not, you have to read the sanction letter and the appraisal letter of the borrower very, very carefully. And when you would read the sanction letter of the borrower, you would find the various pre-disbursement condition mentioned there. I would advise you to make a list of those pre-disbursement conditions which are contained in the sanction letter. And then you should tick mark against each of the pre-disbursement condition that the borrower would have submitted to the bank. So our duty here becomes dual. First, you have to verify the various assertions which the borrower has mentioned in the appraisal document while submitting it to the bank. And second, to verify the pre-disbursement condition. 90% of the time, sir, it is seen that the bank is disbursing the loan without the verification of the pre-disbursement condition. And as a statutory branch auditor, I would also request you to make an independent assessment of the pre-disbursement condition. We should just not rely on the borrower certificates or the statutory auditor of the borrower certificate in verifying the pre-disbursement condition. To quote, for example, a bank A sanction a loan to borrower XYZ, and bank A says that I would disburse the loan only when the equity of rupees 20 out of the total project cost of 100, equity of rupees 20 is being infused by the promoter upfront. Now, when you go to the bank and ask for this pre-disbursement condition compliance, banks give you a CA certificate or banks give you a borrower certificate, which mentions that the borrower has brought in the required equity of 20. So one way to look at it is, since the borrower certificate is available, so our condition is compliant. But as I told you, we should be very active and vigilant, and we should ensure an independent verification of the assertion of the borrower. I went to the branch and asked for the bank statement of the borrower company and analyzed the various credit transactions that are coming into that borrower account. And based on that, I found that the promoters have only infused till date rupees 10 of equity. So if in the bank only 10 of equity has been infused by the promoter, how can the borrower say that the promoter have infused the required equity? So in case they are saying this, it is probably not a correct picture that they are giving to the bank. And we must report this observation in our long form audit report. Because this is precisely what we have been sent for in the bank branch audit. Second example could be that in the pre-disbursement conditions, it is mentioned that the borrower before the disbursement of the loan has to furnish a CA certificate certifying that all due liabilities towards the company has been paid. And the borrower gives a certificate from its chief financial officer on the dotted lines stating that all financial liabilities pertaining to tax have been discharged by us and there is no outstanding amount. As an auditor, when you analyze its financial statements at the year end, you find that there are many disputed liabilities which are outstanding since more than 1 year, which has been reported in the Caro report of the borrower. And the CA certificate does not make any, the CFO certificate which the borrower has given thus becomes contradictory to just what is written in the financial statements of the company. Now, if these two things are not matching, then I don't think the disbursement condition has been properly checked or properly complied with the borrower. So again, we should mention this fact into our long form audit report, and we should say that the pre-disbursement condition which you have stipulated has not been met with. Moving on, pre-disbursement condition, on the pre-disbursement condition, there are some pre-disbursement condition which says that the loan in the borrower account can only be disbursed when there are no outstanding in the loan account of the borrower. Now you go to a particular branch and you find that the name of the borrower is appearing continuously in the SMA category. And immediately when this particular loan was sanctioned to a borrower, a second loan was also sanctioned to him by the branch, and the proceeds of which is routed to its main account, and the main account's irregularity are stopped or are being regularized. And the borrower has given a certificate that no statutory liability towards the bank is outstanding of the borrower. But in reality, borrower had operated a separate account from the bank, and all other accounts, they have closed it from that fund. So can we say that there is no outstanding of the borrower? No, absolutely not. We definitely would have to mention that there is an outstanding of the borrower, and this loan therefore cannot be disbursed to the borrower. In case of term loan accounts, and sir, this is practically what I'm telling you. I get this observation many times. I saw that the borrower is purchasing plant and machinery from XYZ company, and the bank has induced a condition. The higher authorities of the bank have infused a condition on the branch that before disbursement of the loan, it has to be ensured that the credit rating of the vendor who has supplied this machinery is correct or is not in jeopardy. Now, when I go to the bank and ask for the credit report, so suppose in India, if there is any vendor, so there are many RBI accredited agencies like ICRA, CRISIL, which basically give a credit rating or the credit card of the borrower. If I talk of any borrower which is an abroad borrower, then there are companies called as Duff and Phelps, Duff and Bradstreet, which gives the credit rating of the particular vendor. So I went to the bank, they asked me that, sir, the credit rating is not available, and we have taken a request from the borrower on their letterhead stating that their credit rating is sufficient. So should we accept it? In my mind, no. We should verify the credit rating of the borrower thoroughly, and then only we should accept that. Next things are in this pre-disbursement condition only. Plant and machinery, you would always find there would be a term that would be written that either the plant and machinery should not be purchased from related party, or if the proposed purchase of plant and machinery is through related parties, the utilization or the price at which this has been purchased should be at arm's length. So either totally they should not be purchased from related party, or if it is purchased from related party, it should be at arm's length price. Now, when I went for the disbursement audit, I was told by the branch that both these things have been done and they have obtained a certificate from the CFO for it. But when I opened the MCA portal and I verified the directors of company A and my vendor who was giving me the plant and machinery, I found that the directors are common. I found that the shareholders of both the companies are same. Then how can I say that the purchase is done through related party? And if the purchase is not through the related parties, then the loan should not have been ideally disbursed to the borrower. So this is again a point which you could raise while doing the audit of the respective bank branch audit. Similar case goes with the arm's length price. Normally what it is seen is that the borrower just take a certificate from its CFO or the managing director stating that the net worth or the price which is charged by the company is correct. But when the supporting documents are sought, or when a comparable transaction is asked from the company, or when comparable transaction is covered, then it is found that the transactions are not really at arm's length price. So what I am advising everyone is that when you verify, you should do it an independent examination of all the things with you. The next part which comes the part of document review and monitoring. And in the document review and monitoring, we just talked about the cash credit account. And we also know that a cash credit account was turned into NPA if the limits of that account are not renewed or the last renewal in that account is older than 6 months. Or the account would turn as an NPA if the stock statement in that account or the drawing power allowed in that account is based on the stock statement older than 90 days. So in both the cases, the account would turn into NPA. So when I am talking of the monitoring part, it becomes my duty to see whether the branch is obtaining timely stock statements or not, or whether the renewal in the account is properly done or not. And it becomes very, very important for us to verify both these things. I'll tell you why. Sir, you would remember जब हम आज से पहले ऑडिट करने जाते थे, आज से 3-4 साल पहले 2020 के पहले जब हम ऑडिट पे जाते थे, या 2020-21 वाला जो साल था उसमें भी जब हम ऑडिट करने जाते थे, उस केस में भी हम लोग एनपीए के बारे में डिस्कस करते थे बैंक के साथ। और जैसे हम बैंक को बोलते थे कि भाई हम ये अकाउंट को एनपीए करेंगे, बैंक हमें बोलता था कि सर आप इस अकाउंट को एनपीए मत करो, और हम लोगों का एक इसके ऊपर वाद प्रतिवाद जो है वो चलता रहता था। हम शायद ऑडिट 4 दिन करते थे, इसके ऊपर वाद प्रतिवाद करने में हमें अदर 4-5 दिन जो है वो लग जाए करते थे, और ये वाद प्रतिवाद चलते चलते 4-5 दिन निकल जाते। अब what RBI felt is that since the entire exercise is done through the computer system and all the banks have migrated to the computer system, why should this NPA automation be left? This should also be done through computer system. And through a circular of September 14, 2020, they said that all the NPA automation which is happening in the bank should be automated and should be system driven. And now when we go for audits in these years of 21, 22, 23, 24, or even now, you would not find cases wherein you would find NPA accounts, because the system would already degrade those accounts as NPA. And we would not have much of MOCs. And now comes the question how to stay relevant. The bank goes to RBI and now they tell RBI that since everything is automated in our bank, then what is the need of audited? What is the need of calling Raghavendra Goyal ji and Manish Bansal ji and Dinesh Gandhi ji and Sanjeev Singhal ji to our bank when the entire process is automated? But see, system works on the logic of inputs. And if the inputs are correct, the results ought to be correct. But if the inputs are not correct, the result cannot be correct. I just told you that if the limit is not, the last renewal of the limit is older than 6 months, then the account needs to be classified as NPA. The branch also knows this and the system also knows this. So as and when the limit was expiring in the system, branch manager went to the system and he asked his junior to renew the limit in the system without actually renewing it on papers. A limit can only be reviewed when the borrower submits documents for the next year. The borrower submits the financial statement, the GST returns, the projected, the CMA data of the next year. Then only the limit can be reviewed. But without receiving all the requisite document, still the bank renews the limit of that particular borrower. When you go to a branch, you ask for the sanction letter, you did not get the sanction letter. So whether we have to rely on the systems alone? No, not at all. We physically need to verify whether that account has been renewed or not. And if that account has not been renewed physically through a sanction letter, then the date entered in the system is baseless and should necessarily be classified as NPA. The date of stock statement or the frequency or the duration of stock statement is usually 1 month. And I told you just now that if the DP is allowed in the account in a stock statement older than 90 days, meaning thereby that if the account wherein the stock statement is not received for 6 months, then that account has to be classified as NPA. Today, a stock statement comes to me, and as a bank, on 1st of October, I enter, and when I go to the system, there are two columns. One, to enter the value of the stock, and second, to enter the duration of the stock statement. So I correctly jot down the value of the stock from the stock statement. But when I was adding the duration, I intentionally do not mention it as 1 month, I mention it as 6 months. So the system for next 6 months will never overdue this account or would never report this account as a defaulter account, because for the system, the stock statement has been received. But in actual, the validity of the stock statement was only 1 month, and after that month, no stock statement has ever come in the account. So again, I would say we need to report this in the LFAR also, and we also need to pass the MOC if the account is going for a stock statement older than 180 days. Again comes the point of stock statement. You see a stock statement. Jesse sir, we know how to calculate a DP. The borrower knows how the DP is calculated, and he also knows the outstanding balance in the account. And based on the outstanding balance, he does a backward calculation and compute the DP so that never his outstanding balance goes beyond the DP. So what the borrower does is gives you a DP on a stock statement, and you check the stock statement and you find that everything is correct in the stock statement. What the value is written in the stock statement has been entered in the system. What the duration is given in the stock statement has been entered into the system correctly, and there is no deviation between the two. But then your chartered accountant minds lights up and you say, chalo, I'll make a verification of the correctness of the figure that this party is giving in the stock statement. Normally, whenever the stock statement is given by the party, they give various quantitative details also. Now, in the month of October, when the stock statement is given to me, I am told by the borrower that his sales are rupees 10. just listen to me very carefully, sir. In the month of October, the borrower tells that his sales for this month of October is rupees 10. In the month of November stock statement, the borrower tells that his sales is rupees 15. In the month of December, the borrower tells that his sales is rupees 20. As per the sanction letter of the borrower, debtors up to 90 days is only allowed for calculation of DP. I see the stock statement and I found that borrower has reported debtors up to 90 days as rupees 100. Is it making the sense with the GST sales which the borrower has reported? No, it is not. As per GST sale, my total 90 days debtor, assuming that my entire sale was on credit, can maximum be 45 rupees. But the borrower is reporting a debtor figure of rupees 100. So thus it becomes important for you to verify whether the figures which the borrower is giving is actually correct or not. Now, in this process of review, you also need to check the stock audit report. As per RBI guidelines, every account which is above 5 crore rupees, there has to be a mandatory stock audit being conducted. Some of the bank, this guideline has been increased depending upon the risk rated had gone to 10 crore also, and for some borrowers at 1 crore where the credit rating is not sufficient. And then they obtain a stock audit report. And stock audit reports are obtained both for performing assets as well as non-performing assets. So as an auditor, we need to check for two things. Number one, we need to check whether in all the eligible accounts, stock statements are received by the bank timely or not. Second, we need to check whether in all the eligible accounts, stock audit has been done by the bank. We also at this point of time need to check that whatever the adverse observations which the stock auditor has reported in their respective report, what corrective actions have been taken by the bank on that. In case the corrective actions are not taken by the borrower or by the bank as intimated by the borrower, then it becomes our duty to report the fact in the LFAR. So we need to check as the auditor whether the stock audit is done or not, or whether the corrective action is taken. There are two kinds of security which is available in the bank, sir. One is primary security and collateral security. So when I talk of primary security in terms of a cash credit accounts are stock and book debts. When I talk of a term loan account, if the term loan account is of the housing loan, the house is the primary security. If the loan is of the car loan, car is the primary security. If the loan is against plant and machinery, the concerned plant and machinery is the primary security. Then there is also a collateral security. See, the bank's main business is not what the business of the borrower is. Bank's main business is lending money. And suppose I fund a rice mill, my main business would not turn into a rice mill. So though I take the primary security in terms of stock or book debts, but I might not be able to sell those rice stock or the realized money from those rice debtors as effectively as that borrower was doing. So suppose tomorrow the account of the borrower goes bad, then I would have to have the immovable property or the collateral security to support me. As I told you, the primary security of the bank is valued on yearly basis in the form of stock audit reports. For accounts wherein the exposure is below the threshold of stock audit, then there is a branch visit which is done. So as an auditor, you also need to check that branch visit register, and you need to see whether that branch visit report in all eligible accounts are there or not. And if the branch visit report is not there, you should report it. In case of term loan, the plant and machinery value is driven by the invoices. And based on that, that value is entered. And every year, there is a depreciation which is applied, and you have to reduce that value in your CBS system of the bank also. This is one error which we find. Suppose today we purchase a car for 10 lakh rupees. So every year that value should be depreciated. But if you see in the bank's record, they maintain a value of 10 lakh rupees of the car irrespective of what duration of the loan has expired, or irrespective of what duration of the loans and advance of the housing has expired, the value of the house remains the same in the bank's book, or the value of the plant and machinery remains the same in the bank book. That needs to be reduced every year equivalent to the amount of depreciation. As far as collateral security is concerned, immovable property is concerned, the valuation of the same happens once in every three years. So we need to see the valuation report, and we need to check whether that valuation is happening once in 3 years or not. And if that valuation is not happening once in 3 years, we should report the security as zero in those eligible accounts. If you go through that valuation report also very thoroughly, sir, you would find three types of valuation which would be there. One would be the market value, one would be the realizable value, and one would be the distress value. What is the market value? Market value is basically the value which is available for that asset in the market. Realizable value is the value which you would normally realize once you want to sell the asset. So market value can only be realized if you find a particular borrower. But normally in a property transaction or in an immovable transaction, there remains some discount from the market value. So suppose the market value is 100, realizable value is normally taken as 80 by the respective banks. And distress value is a value which you realize once you want to dispose of the asset within the shortest possible time. Now, as per Reserve Bank of India guidelines, a bank is not allowed to hold the assets in its own name. They can mortgage the asset, but once the loan turns an NPA and they issue 13 to 13(4) notices, they have to immediately sell those assets in auction. They cannot hold the assets in their own name. So since they cannot hold assets in their own name, so within a very short possible time, they want to sell the assets. And whenever you say that I want to sell this asset today only, so you would never get the desired valuation for that property. Any borrower would give you certain discount and take your property. So that value is normally treated as distress value, and that value ranges from 60 to 70% of the market value. So when you sanction the loan, you enter the realizable value of the security as a security value. And when the account turns as an NPA, you take the distress value as the realizable value. And why this is important, sir, maybe tomorrow you will understand that there is a provision requirement separate on the secured advance and the provision requirement separate on the unsecured advance. So a substandard account, the provision requirement for a secured advance is 15% vis-a-vis 25% on an unsecured advance falling in the substandard category. For D1, D2, D3, when the provision requirement is 25, 40, 100 respectively, as soon as I tell that this advance is an unsecured advance, the provision requirement immediately jumps to 100%. So there is, which is very important to see whether the valuation is and whether that has been correctly entered in the system or not. Now, when I say of the review of the account, the loan account is disbursed and the loan is for a plant and machinery. And bank has given a loan for purchase of plant and machinery, which is new. I see the visit report of the of the branch official who have gone there. And I see that the branch official has mentioned that the plant and machinery which the borrower has procured is rusted. And immediately my mind strikes that the machinery which has just come 2 days before and which has just been unpacked at the site, how can rust come on the machinery so quick? So since a suspicion came in my mind, I went to physically verify that borrower premise. And there what I found out was that all the machinery were rusted and those were second-hand machinery, not the new plant and machinery. So it is very important for us to verify the visit report of the branch also post sanction, and in case there is some suspicion in our mind or in case things are not adding up as it is written in the sanction letter, we should qualify and we should see and report this fact as an LFR. Now you can ask me, sir, suppose if we find such a kind of situation, what should we do? Sir, this is an ideal case for declaring this account as a fraud. Because the borrower has represented to you that it has purchased a new machinery. It would have given you a utilization certificate stating that new plant and machinery has been purchased, but in reality, only the old plant and machinery has come to us. So since only the old plant and machinery has come to us, this is a typical case of fraud that needs to be reported to Reserve Bank of India also. Now, in large accounts, sir, you would remember in 2015, the entire banking industries of ours went into a turmoil when Mr. Raghuram Rajan was the governor of Reserve Bank of India and asset quality review happened. And there are various big shots of our banking industry, SR Steel, Ira Infra, Bhushan Industries, Ruchi Soya went bankrupt and all these accounts were classified as non-performing by the respective bank. And when the root cause analysis of this was done, it was found out that the major reason for these accounts classified as bad was that they had some diversion of fund which has happened. And then a concept of agency for specialized monitoring was launched, and it was told that certain specialized agencies be monitored and be engaged by the banks to monitor such accounts. And that monitoring would help the banks to see that the desired convents of the sanction letter are met or not. So as a branch auditor, it becomes your duty to verify such ASM reports also. These reports would be available for accounts exceeding a threshold of 250 crores. So as an auditor, you should verify these accounts as well. While reviewing the accounts of the company, we should also see the balance sheet of the borrower account. Practically, you would find various instances wherein the borrower through its stock statement would be declaring a higher DP. But when you would compare its DP in the audited financial statement, you would not find DP on those borrowers. So the DP declared in the balance sheet of the borrower would be much higher than the DP which is actually coming. And if on a systematic basis or on a continuous basis, you are finding that the DP as per stock statement is higher than what is actually coming in the balance sheet of the respective years, then such accounts are an early warning account for you, and these accounts require deep diving at your end. And then based on such deep diving, based on the analysis of the GST returns, based on the analysis of the books of account, and then ultimately the DP you compute, you should take a call on the asset classification of these accounts. So therefore, the analysis of the financial statement becomes very, very important for us. I practically, sir, have also found out that the borrowers, in order to avail higher DP, classify their creditors under different headings in the balance sheet. So the creditors are not exactly classified under trade creditors. They are classified under long-term payables and other payables just to avoid the DP problem. But when you actually analyze, you find that these are all creditors and these should be deducted from the drawing power. And if they are deducted from the drawing power, the true DP does not come in these accounts. So analysis of the financial statement becomes very, very important. So you would also recall that in our LFAR, we also need to report whether the all the accounts are have above a specified threshold which is decided by the bank, whether the audited accounts are available or not. As per Income Tax Act, not all accounts are required to be audited. But if you have availed finance from the bank, then depending upon the loan policy of the individual bank, audited balance sheets are mandatory. So we as an auditor need to verify whether those audited balance sheets are available with us or not available. And these are very important to be seen. Now, as I told you, regarding valuation, there is a concept of legal report. Whenever a bank accepts any property, they do a legal search of that particular property. So do verify whether those legal reports are available to you or not. And depending upon the quantum of the loan, these valuation and legal reports numbers vary. For a loan exceeding a particular threshold, the bank says that two valuation reports are required or two legal reports are required. So very carefully study the loan policy document of the respective bank, and suppose two valuations are required, please pursue whether those two valuations are actually taken or not. Also, insurance is an important integral part in the loan accounts. So verify whether those insurance documents are taken by the bank or not. An insurancer should be on peak stock basis. Suppose there is a borrower whose peak stock is 100, average stock is 50. The bank says that insurance should be taken on a peak stock basis, because suppose if there is any fire and the stock is underinsured, then the bank would only get as per principle of subrogation. So it is very important to verify what is the peak stock of the company, and based on that basis only, the level of insurance should be decided and taken. So then again, there is a law of limitation in India, which says that if in 3 years you have not sought for your loan amount, then that loan amount is deemed to be waived. This rule is applicable in the banking industry only. So there is a concept of acknowledgement of debt due or balance confirmation letter. Names may vary from bank to bank, which the banks are required to take within a period of 3 years. Once in a period of 3 years, they have to take it. So verify from the files of the borrower whether those are available in the files or not. And in case those are not available, then it must be immediately taken. Because if this is not immediately taken, then the chances, if the bank loan goes bad, then the chances of bank recovering it would become very mute, because in the court of law this dispute would not stand and the borrower would plead that bank had not demanded anything in the last 3 years, therefore my loan is not now due. So this AOD also becomes very, very important to verify. Now, if we move on to the term loan accounts, the housing loan accounts are in today's time are sanctioned mostly on the under constructed properties. And when these housing loans are sanctioned on the under construction properties, I only have as a bank a tripartite agreement to my rescue or to my security. And when the house gets completed, that registry copy should come to me, and this tripartite agreement should be replaced by an equitable mortgage or a registered mortgage. So do verify as an auditor whether this tripartite agreement on completion are getting replaced by those documents or not. Because ultimately your security would come based on this registered agreements only. For your records, I would advise each one of you to verify the concurrent audit reports, the credit audit reports, the stock audit reports, the internal inspection reports which are available of the various banks to determine your sample size and to determine the file quality. These reports will help you in analyzing in greater detail regarding the nitty-gritties available in the file. Also note that when the banks files for a particular borrower, they maintain two kinds of file. One is the correspondence file and one is the permanent file, wherein the permanent set of documents like the sanction letters, the valuation reports, the legal reports, those are attached. So while you verify the things, you should take care of both the things. And you should verify both the sanctioned file, the permanent document file. Also, you should take the correspondence file as well. Because many times while you study the correspondence file, you get a lot of insight out of it. And these documents, as I mentioned, the sanction letters, the valuation reports, and the legal reports, they are naturally coming to your rescue while doing that. So these all things basically should be studied by us. Now let us also talk about the term loans which are project loans. We have till now talked about the retail loans. Now let us also talk about the term loans which are the project loan. So by project loan, what I mean is a borrower goes to a bank stating that he wants to set up a new industry or he want to build a group housing society, the total cost of which is XXX, and there is a debt equity ratio which is maintained of 25/75, and he wants the support of the bank to the tune of rupees 75 and 25 rupees he would give from his own sources. And when he approaches the bank for such a loan, then since it is a bigger loan and bigger appraisal and everything is required, so bank appoints, apart from the other things that we have discussed till just now, bank appoints an LIE, the lender independent engineer and a financial consultant to the bank's rescue. And normally in these kind of loans, which are mainly a project loan kind of a thing, there is also a TV consultant which is appointed, who is a techno-economic viability study provider to the bank. And based on the numbers that the borrower has given to the bank, he does a TV study of those loans and tell whether the loan is actually viable to be sanctioned or not. And if the loan is sanctioned, whether it can actually repay to the bank or not. So just go through the TEV study. In the TEV study, they would talk about the assumptions. So as we all know, all the borrowers are making the things on the DCF valuation. So just make sure whether that is done on the DCF valuation or not. And if it is done on the DCF valuation, whether the assumptions that they have taken, whether those are correct or not. Now, I also talked about the LIE report, the lender independent engineer report. Every time a disbursement would be made, a lender independent engineer report would be sought. And that lender independent engineer report would not only comment upon the adequacy of the various permits which the borrower ought to take, it would also comment upon the physical progress of the loan account. So the bank is duty bound to see this LIE report before making fresh disbursement. It is various times seen that the borrower submits a request for a new disbursement because this loan is not disbursed in one go. This loan is disbursed in multiple trenches or multiple rounds. And when this loan is disbursed in multiple trenches or multiple rounds, before every round, the utilization of the previous round is seen. So we need to see whether the utilization which the borrower is submitting and whether the utilization which an independent agency which is appointed by the bank in the form of LIE, whether both are corroborating with each other or not. And if both are not corroborating with each other, then appropriate action has to be taken on that. So this LIE report also becomes a very important part for us to verify this thing. Then in all these big loans, there is a concept of credit rating which comes. A loan account in today's time above a threshold of 25 crore, RBI says a limit of 5 crore, but most banks have now adopted a threshold of 25 crores. There is an external credit rating which is required to be obtained. And this external credit rating should be obtained in all the loan accounts. And there are some accredited agencies to it. So we need to see whether that credit rating is taken by the banks or not. And we also need to see at this point of time whether there is significant decline in the credit rating or not. Suppose yesterday or 1 year before, the credit rating of the particular account was AAA. Now suddenly the credit rating has fallen to triple B. So what is it that has happened that has triggered such a decline in the credit rating? So justification regarding that must be available with the bank. And if it is not available, you should write this point in the LFR. So all these accounts would typically be the large advances which would be there. So in that point wise, you should reply on that. I would also like to stress upon one important point, which is why the credit rating is required. You know, when the account is restructured, an account which is restructured can only be upgraded when it achieves a satisfactory performance during a specified period. For accounts which are exceeding rupees 100 crores, then there is one more stipulation that apart from the satisfactory performance in the specified period, they also have to have a credit rating from 2 accredited agencies of triple B negative and above. So suppose your account was restructured at a point of time and now the bank wants to upgrade it, then you also need to check whether that has a credit rating of triple B negative or above. See, the bank audit is the concepts I can go on for hours and hours to go. So I would just take the last concept before we leave the floor open to questions. So let us make it some interactive also. So the last concept that I would like to take is regarding the SIRSAI. So when you sanction a loan, and you would remember, sir, when any loan is sanctioned to a company, then the banks are duty bound to disclose the interest of theirs in the company on the website of Ministry of Corporate Affairs through the various forms, CSG1, CSG4. They want to register their charge on the company's asset. But what happens to if the loan is sanctioned to a proprietor or a partnership firm or an HUF or any other form other than company? You would not come to know whether this particular asset is financed by someone else or not. And there were practically various frauds which were happening in this direction. And to protect that and to protect the interest of the public banks, Government of India came with a body of SIRSAI. And this SIRSAI was required to register an interest of the bank if they have given a loan in any property. Either it belonged to a company, either it belonged to an individual like Raghavendra Goyal or Manish Bansalji or Dinesh Gandhiji, or it belonged to an Hindu undivided family. More so in December 2018, RBI made it mandatory for bank to register SIRSAI on the stock book dates of the borrower company as well. So this SIRSAI in today's date is applicable both on movable assets as well as immovable assets. So as an auditor, when you go and verify the file of the borrower, you have to check whether that SIRSAI ID is available with you or not. So that also is a very important part that we need to take. So now with this, I would like to end my deliberation here and would leave the floor open for questions so that we can take question and answer from the participant. With a small request to all the participants who are attending that see this opportunity of bank branch audit has been created by our forefathers who have carried it for years and years now. And now it is up to us able shoulders to continue this exercise and make the regulator realize that the work that we are doing is in their best interest. Trust me, with the automation part coming in, not a lot remains on us, but there are various activities in the bank that needs to be closely scrutinized and verified and reporting. Normally, what I feel is that we do a lot of hard work verifying the transaction, but when it comes to reporting in the LFAR, we somehow don't report it. See, most of the LFARs today are on the computer platform. And on the computer platform, there is a set procedure or there is a set format of reporting the observation. So just analyze that format. And once you start your audit, analyze it before that so that you can verify and jot your observations in the particular format. Normally, what I have seen is that we don't record the observation in that particular format, and at the end of the day, we say, "Chalo, it is okay. Let us leave the LFR ऐसे अभी तो audit को close करते हैं." But my humble and sincere request to everyone not to do it that way. Record the observation properly so that we can do it effectively. Would request now Manish ji and Dinesh ji if there are any questions from the participants, and would request the participants to give their questions if they have not already given so that we can take that one by one.
So they had given some questions. I asked you. The first question is, sir, what happens if the gold itself is correct gold of 24 or 22 carat? How the auditor is supposed to verify whether gold in the pouch is genuine gold?
Sir, as I told you, we are not the subject matter experts for verifying whether the gold is correct or not. We in this case have to rely on the valuation certificate of the empaneled valuer of the bank. So we need to see whether the valuer who the bank has approached is an empaneled one or not. And if that valuer is an empaneled one, then based on its report, we have to see for the valuation of the gold.
Okay, sir. The next question is, sir, is auditor need to check gold loan is given on the basis of gold is genuine purchase or stolen gold, etc.?
So then again, this is one question which as an auditor, you cannot determine whether that gold is an actual gold or is a stolen gold. Now, the only thing that you can do is you can verify the income statement of the borrower. So if based on the income statement of the borrower, the eligibility of repayment is coming. Because see, as per our Income Tax Act, the Income Tax Act also says up to a specified threshold of gold that is considered as 3 dhan. And we will not ask the source of it. So as a bank also, I don't think we can ask the source of it. As long as the repayment thing is met, I think it is okay.
Okay, sir. Thank you, sir. The next question is, sir, should we verify 100% physical count of packets and match the number of gold lens sanctioned?
Yes, sir. This year, I would suggest that you should physically verify 100% of the gold loan packets. At least the packets you should count. Valuation also you should see. As I told you, opening of the packets would be difficult. So, but the physical verification of each packet should be done at least.
Thank you, sir. The next one is, sir, should we report window dressing where FDRs have been issued by debit to cash credit accounts at the year end, though supported by proper request letter in view of the fact that cash credit is sanctioned exclusively for business purposes?
Very good question. So before answering this, just for the benefit of all the members, I would tell what is window dressing. Window dressing is basically, so as an auditor, what we report in our main audit report, that we say that the state of affairs of the company are true and fair. Now, if there is any transaction which is appearing that the state of affairs do not give a true picture, then that is called as a window dressing. So suppose the question that is asked by the particular participant is, they are saying that the cash credit account is debited and an FDR is created out of it. So what the bank does is on the last day, cash credit account is debited. So its advance portfolio goes up. FDR is created out of that fund. The deposit portfolio of the bank goes up. And in turn, the total business of the bank goes up. And immediately on the closing, when the closing happens, immediately on the next day, the reversal entry happens. So whether we need to take this into window dressing? Yes, sir, this needs to be taken into window dressing. Now you would find a reply of the bank. Bank would say, sir, this is our transaction which we have done on the request of the borrower. So in my opinion, you should see the past history. And if you are feeling that every year this transaction is happening, and you are, as you have already told in your question, that the cash credit limit has not been sanctioned for creation of FDR. So you can very well say that even if the request of the borrower is there, this is a window dressing window dressing transaction, and suitable memorandum of changes MOC should be suggested for this as well.
Sir, please specify the methodology to verify and report on non-fund based working capital facilities such as letter of credit and bank guarantee limits.
Okay, so our loan portfolio is divided into two parts, sir. Fund-based and non-fund-based. Fund-based loans are those loans which are immediately crystallized into money part. Non-fund-based loans are loans which at present point of time are not crystallized into fund-based part, but at a later date can crystallize into fund-based liability. The typical examples of the non-fund based limits are letter of credit or bank guarantee. What is letter of credit and what is bank guarantee? Suppose you want to purchase your goods from your vendor who has no past dealings with you. So he is afraid whether if he sends the goods to you, whether you would make a payment to him or not. So one way is that he asks for an advance payment, which would have a impact on the liquidity of yours. So he says to you that you go to your bank and get a letter of credit issued in my favor. That up to this limit, if I supply you goods, then your bank is duty bound to make the payments to me. So that letter of credit is issued, and based on that letter of credits, the goods are delivered to you. And ultimately, when the goods are delivered, the party in whose name the letter of credit is endorsed, he submits the required documents to your bank, and the bank makes payment to the party debiting your account. In case of bank guarantee is a recovery mechanism or a backup mechanism. In that, the bank writes, suppose my customer does not pay to you, then if based on your request, I would make payment to you. And bank guarantees are not introduced in the course of regular transaction. Those act as a backup transaction. Suppose you get a contract from a municipal department, so they normally take a performance bank guarantee. Suppose you do not perform, then they would get your bank guarantee encashed. Now the question was, this was the base for letter of credit and bank guarantee. The question was, what should we verify? Now, first and foremost thing that you should verify is that whether this LC limit and bank guarantee limit is sanctioned or not in the sanction letter. So in the sanction letter, this limit would be sanctioned, then only you can classify. And when you read the sanction letter, it would be written that you can give a letter of credit or bank guarantee provided that the credit rating of the particular customer in whose favor this is to be given should not be related. So you should verify that this party should not be related, or the transaction which is happening should be at arm's length price, or it would be written that the credit rating of that party should be AAA above or BBB above, something like that. The condition would be there. Second, you should verify when the bank opens that LC, then whether those requisite documents are there or not. Whether a purchase order from that customer has been received to our borrower or not. And when that customer has given the goods to our borrower, whether this is supported by bill of lading and other shipping documents. If all these documents are available, then yes, the letter of credit and bank guarantee can be issued.
So the next question is, please explain the methodology to be adopted to verify bills discounting facility and also overdraft against book debts.
Okay. So now this bills discounting facility is also a very important activity that needs to be seen. And in today's time, I would say, sir, this is one of the areas through which bank is resorting to avoiding NPA classification. So I would first tell what is bill discounting facility, then I would tell how this is being misused by banks. Bill discounting facility is like I as a vendor issue a bill to Manish Bansal ji in his name for rupees 100, and as per my terms of payment, I would get payment after 60 days. But since I would get payment after 60 days, it would be a problem on me for managing my working capital cycle. So I immediately approach my bank and tell my bank that, see, this is a bill which I have raised onto Manish Bansal ji, and I would get the payment of this bill after 60 days. Today, you discount this bill. So what bank does is credit rupees 58 into my account and 2 rupees they deduct as a discounting charges. So as per the verification, what we need to do is I need to see whether Manish ji has given me a proper valid purchase order or not. I also need to see whether Manish ji's net worth is correct or not, whether he is in the industry of which I am supplying goods. There are cases when I am found that I have drawn a bill of Manish ji for his purchase of FMCG goods when he was actually dealing in the real estate industry. Or Manish ji is dealing in the jewelry sector and I have drawn a bill of FMCG onto his name, which is not acceptable. I, as a customer, have to be in the same line of business. There has to be a vertical integration or an horizontal integration and to proceed further. So if all these documents are available, then I can draw a bill. Now, as an auditor, what further you need to check is you have discounted a bill. If you have discounted the bill and credited the same account of the borrower, the same cash credit account, then it is okay. But if you have not credited the same account and you had opened a separate account for better monitoring, then the IREC circular says that while you calculate the outstanding to calculate the 90-day cycle, then the bill discounting outstanding and the main account outstanding should be clubbed and seen. If it is not clubbed and seen, then there is no use. Now, as I told, how the bank misuses it. There is a cash credit account of Dinesh ji which is running as overdue since last 90 days. Now, I know my system would classify the account as NPA immediately on completion of 90th day. So I ask Dinesh ji that you give me any bill so that I can discount it and make your account as regularized. Dinesh ji says that there is no actual bill. I can only generate a bill if you are asking me to. There is no goods that I have supplied. The bank says, no, today I want to protect my asset. Otherwise, it would have an impact on my provisioning. So they take a bill from Dinesh ji, which has been endorsed in the name of Manish ji, and they discount it and credit it in the account. But when you seek for the documents, neither you get the purchase order, neither you get the proof that the goods are being dispatched to Manish ji. So therefore, if such a case comes to you, in my humble opinion, the said account should be classified as an NP account since it is only an instrument used for evergreening of loan.
Thank you, sir. So the next one is, sir, if sales are less than the projected, so only reporting is to be done, or whether something has to be done for the NPA also, NPA front?
Sir, as I said, if the sales is less, then reporting in LFAR is done. But if you feel that on a continuous basis this sale is less, then it would give you a trigger that this is not a proper account or a fit account. And if you calculate its DP in a true sense, that DP would not come, because if sales are less, then debtors would not be there, then the stock would not be there. So its DP would not come. And if you calculate its DP, definitely this account would be a fit case for classification of the same into NPA.
Sir, as you told that sales in CMA should be in trend of actuals, and if the same is not, we should report where it is to be reported.
Sir, in the credit appraisal part in the LFAR, they ask for your observation. What is your general observation on the credit appraisal? Then you can report there. Second, if the account is a large advance, then in that you get sufficient opportunity to report. There also you can report.
Sir, some banks have a scheme to sanction cash credits based on their GST turnover. They do not calculate DP, although the primary security is hypothecation of stocks. Is there any contravention to RBI guidelines?
No, sir, there is no contravention. They normally called it as a GST Express loan. Most of the leading banks, Union Bank, Punjab National Bank, Bank of Baroda, State Bank are doing this. So they are basically relying on the figures reported in the GST portal. On based on that, they are sanctioning the loans.
So do we have to check whether projections are in agreement with actual balance sheets in terms of turnover? For example, 10% or 20% increment, or just rely on projections and check limit is in accordance with projections?
Let's see if the projections are increasing every year by a acceptable margin, as you told 10%, 20%, then I think you can accept it. But if suppose the projection are going way beyond the acceptable margins, and suppose the projection have increased 50% income as compared to the actual figures, then definitely you should seek a question onto that.
So there is something different question. What is legal entity identifier for borrowers in a bank for rupees 5 crore to rupees 10 crore and loans above rupees 10 crore?
So this legal identity identifier has been introduced by Reserve Bank of India, and this has been done for proper tracking of the loan account. So it has been done for the big accounts, and it is basically more of a compliance thing that the banks require now to be done. And before the bank sanctions a loan to a borrower, this LEI has to be taken. This is called as a LEI. There are two things in the bank: LIE and LEI. So this is LEI, which needs to be taken by the respective borrower.
So whether there is any difference for 5 crore to 10 crore or above 10 crore?
Sir, basically this depends on the bank to bank. RBI has initially given a threshold of 100 crore, which they have gradually reduced. Now it depends on the bank to bank how they want to obtain the LEI.
So what would be additional audit procedures required in case of end-to-end computerized loans sanctioned and disbursed by bank using end-to-end software-based technology?
Okay, so a very good question. As I told that all the loans are going by the software-driven process or the computer-driven process. So I would take this question into two parts. First part is, what should be our role when the loan is sanctioned through a computer-driven process? So I would say that if the loan is sanctioned through a computer-driven process, you need to see whether the inputs which the bank has fed into their system, whether those are correct or not. Because the eligibility of the loan depends on the inputs the bank feeds into the system. So the projected sales, what it has feeded, the provisional sales, what it has feeded, the actual sales that it has feeded, that needs to be verified. Now, when I come to the NPA automation part, then again, you also need to see the inputs. An education loan where, as per the sanction letter, my moratorium is 6 months, but I check the system. In the system, the moratorium allowed is 18 months. So the system would not make any installment overdue in case of that agriculture account. So we need to see whether the inputs entered into the system are correct or not. My EMI is 1000 rupees, but in the system, the EMI entered is rupees 10 only. My loan tenure is 20 years, but in the system, the loan tenure entered is 35 years. So I need to check whether all the parameters which are entered in the system is correct or not.
Okay, sir. Sir, in case of KCC for dairy, the account is taken as secured, taken footer as security. No other security is taken by bank against this type of advances. How these advances can be taken as secured advances because the stake of footer is decreasing every day. Livestock consumes the footer every day. Whether these KCC advances should be classified as unsecured advances?
So normally, in case of KCC accounts, the security is not only fodder, the security is also the crops. However, suppose there is a cattle rearing farmer who does not have the land available with him, and he only has the fodder available with him. Then in that case also, suppose the fodder is reducing each day, he would also be purchasing fodder, because every day the whatever the fodder he is consuming, he would be selling the produce of the cattle in the market and taking fresh fodder. But suppose you go to the physical verification or in the branch visit report, you see that this stock of fodder is reduced in comparison to what was assessed at the time of sanction, then yes, you can treat it as an unsecured loan.
So in last audit, we have found some coins which are not counted and not recorded in cash book of bank. What is reporting method? Whether we make through MOC or only reported in LFAR?
No, suppose sir those coins are not there in the books of the bank, then definitely you have to record an MOC also for that. And reporting in LFAR is also required.
Thank you, Goel sir. Now I request Manish ji. I think some question he also have with him to ask from you, sir. Manish ji, please put your questions. Manish ji.
I think Manish ji का video hang हो गया है sir.
Statement.
Manish sir? Manish sir, you are here? Manish sir, can you hear me?
Yes, sir.
Sir, questions are from your side. Manish sir, you are here? Ji.
If you can take it from your end, I think Manish ji's video is
sorry.
hanged, or if you have those questions, maybe you can take
I'm
it.
requesting
The
Anil ji
question
to
is,
share.
suppose the periodicity of the stock statement is quarterly
Or the
Am I audible, sir, now?
ICI team, if you can take it up.
Yes, Manish ji, you are audible, sir. You can speak, sir. Please, Manish ji. No.
Sir, am I audible now?
Yes,
Yes, sir.
Manish ji.
Yes, Manish ji.
Sir, the first question is related to stock statements. If the stock statement periodicity is quarterly or annually, how it is going to calculate the NP norms of 90 days overdue, sir?
So suppose if the stock statement frequency is quarterly, sir, so if that quarter stock statement does not come, then after 90 days it would become overdue, and then after 90 days it would has to be turned as NPS. Similarly, in case of yearly stock statement, from the date of last stock statement, 180 days meter has to be seen, sir.
Right, sir. Sir, though you have already answered this question, but still for the sake of the query, is an auditor liable to verify the authenticity of the stock statement submitted by the borrowers?
Yes, auditor is liable to verify the authenticity of the stock statement that is submitted to the borrower, because ultimately there are various questions in the LFAR which points to this, like is the DP properly computed, or are you satisfied with the DP calculation? Then you also need to take into account the stock audit report which is submitted. So yes, the authenticity has to be seen and verified. ICI team, can you take up the remaining queries? I think Manish ji is traveling, so
Sir, what measures in that case needed to be taken up for verifying the authenticity of the stock statement?
So as I told you, you can verify the same through the GST returns. You can see the account statement of the borrower. You can verify the DP as computed in the balance sheet. Now in the revised Caro report, there is a question which is asked to the auditors that whether the DP or the data which the borrower is submitted to the bank is in line with the books of accounts. So all these documents would help you in verifying.
Right, sir. Sir, one question is related to the interaction between the auditor and the branch manager. Why it is the requirement that MOCs need to be accepted by the branch manager?
There is no
Because
such requirement of accepting the MOC by the branch manager. In the MOC document also, there is a column wherein the branch manager can disagree with the auditor and move away with. Practically, I can tell you, see, that you would find some resistance from the banks in accepting the MOC. In case they are giving you a resistance in accepting the MOC, there is no problem. You can tell the branch, your respective branch manager, that you can disagree with us and send the MOC. In case they still don't agree, you prepare the MOC in a manual format if if your bank's MOC is in computerized format, and send it to the respective branch, your central auditor, the zone, everyone. Gradually or slowly or gradually, they'll accept your MOC.
right, sir. And sir, another query is from the member. How many short reviews for a particular account be done by the branch manager, sir?
Two short
Or the
reviews
branch?
are allowed as per RBI guidelines. August 21, 2020 circular of RBI says that only two short reviews can be done and the total duration can be 6 months.
Right, sir. And sir, one query is by the member. Can we verify in a limited time frame for a statutory branch audit related party transactions pricing at arm length?
Nice question. I understand that in the limited time frame, it is not possible to verify that. As an auditor, you can verify this through the various statutory audit certificate that the borrower gives, number one. Number two, you can verify whether that party is a related party or not. Suppose you find that the party declared by the borrower is non-related, but in actual it is related on your verification from the MCA portal, then there requires a deep understanding. Then you can seek detailed documents from the borrower and you can devote your time onto that.
Right, sir. Sir, as you have raised a very important point regarding the credit rating agency, so one of the member has required, what is the criteria to verify the credit worthiness of the vendor in the absence of credit reporting
So
report?
there are
Credit
two
agency
kind
report.
of credit ratings. One is internal credit rating and one is external credit rating. Normally, the external credit rating is required if the account exposure is above 25 crore. Internal credit, if the account exposure is not that amount, then the internal credit rating can be taken. And internal credit rating is taken for every account.
Right, sir. That's where my the queries. Though we have learned a lot of things since even after doing the audit for last so many years, few of the relevant things were such explained in such a manner in such a wonderful session. And sir, now I invite our respected Anil D. Lalji for making the thanks vote, sir.
Thank you, sir. Can you hear me?
Yes, you're audible, sir. Anil, sir.
Thank you so much, Manishi. Thank you so much, Manishi. And from the core of my heart, I extend my heartiest thanks towards today's guest speakers here, Raghavendra Goyalji. And from the core of my heart, I extend my almost salute to him for giving his consent on a very, very, very shorter notice. And sir, and you have spoken for almost 1 hour and 45 minutes at a stretch without PPT, without any source, without any help. So thank you so much, sir. We have gained a lot of your deliberation and again on extempore basis, our members have gained a lot and you have covered all the questions received and we have a lot of questions. Almost 2,600 members are live, sir, for this particular webinar on the unstructured learning only. So once again, thank you so much on behalf of AASC of ICI for sparing your valuable time and enlighten all of us on various intricacies on this stock audit as well as loans and advances for relating to the bank audit. Thank you so much. I also extend my heartiest thanks towards both the respective members, one from Ludhiana and another one from Karnal, CA Manish Bansal and CA Dinesh Gandhi for wonderful coordination and this moderation of this webinar. So thank you so much, Dinesh sir, for sparing your valuable time. Thank you, Manish sir, for sparing your valuable time and both of us, both the respected members to moderate this webinar. Thank you so much. And I also extend my heartiest thanks towards all the participants of today's webinar. And I would like to request all the participants and members. Tomorrow again, we are having the second part of this webinar, that is the audit, second part, LFAR, long form audit report. And tomorrow we will be joining at 2 p.m. from 2 to 4 p.m. we are having the long form audit report relating to the bank audit. Thank you so much, sir. Thank you, sir.